Back to the charts with Big Boss Crypto, and today we'll be covering DCA or dollar cost average strategies. We will cover the basics behind how DCA works and explain various strategies that might be interesting for you. Now, please don't take this as financial or investment advice. This is only educational and entertainment purposes only, and these are basically only our own personal opinions on what we find to be the most strategic long term plans from our own personal analysis. But before we take a look at various DCA strategies, you first and foremost have to make it crystal clear for yourself what are your own goals, why are you even DCAing in the first place, what kind of crypto projects do you believe the most in, what's your budget, how much money are you personally willing to put aside for investments, what are key price targets that you want to take profits on in the future, and what's your overall macro trading strategy for the next bull cycle. These are kinds of questions you have to ask yourself and answer in order to be better prepared for the next bull run cycle. Also, another important part when formulating your own DCA plan is to calculate how much you're willing to invest and what your key target is for cashing out your gains. For example, when looking at our most favorite coins, which is Chainlink here, we did macro technical analysis in a previous video where we noted the key targets for profit taking, which are the golden pocket fibs we can see right here between 0.618 and 0.66, and as well as the minimal 4.236 minimal fib extension target, which is right about $207 minimum. And you can draw these fib levels yourself from the all-time high to the current low, and for any of your favorite altcoin projects, as we've done for HBAR here as well, as we've done for Quant, and etc. So you get the picture there. You can do this for whichever altcoin you want. Please note, however, that once again, this is not financial advice, and there's a chance that some altcoins don't replicate this price action where they will reach their minimal fib extension. There might be a risk that it won't. An unfortunate example of this is actually XRP, who has been suppressed for several years and has been in a multi-year bear market due to the SEC lawsuit, which is sad as it has amazing tech and a great future use case when crypto will inevitably be a part of our daily life. But anyway, when you draw the fibs and note down the key areas for profit taking, you can then go to this webpage, which is called coinscalculator.net, and select your own favorite project and see for yourself what your ROI and value will be when having your own target value of your favorite project potentially reached. So we got the HBAR put in right here, and let's say that we invested in total $5,000 over time in HBAR, and we expect our price to be based on our minimal 4.236 extension level, which is around $2.26. Then we'd calculate see our net worth. Oops, that was wrong. It was meant to be a point there. It's not a negative net worth. Alright, much better. Now we see a profit of roughly $177,000, which is real amazing ROI. And let's choose another project. We can choose our favorite actually, which is Chainlink. We put in Chainlink right here, and we'll see the ticker right up here. And let's say we invest $5,000 in it over time, and we expect it to reach our 4.236 extension at least, which is around $207. And now it calculates, and we get pretty good profit margins right here at around $137,000 too. And we can do the same for Quant as well. If we type in Quant, there we have Quant. Alright, and our minimal extension target is around $1,692. And let's say we invested $5,000 into it as well. Hit calculate, and we get $78,000 as well, which is much less, but it's still very good profits for what it's worth. And as I said before, this is only minimal targets. It can go much higher than the minimal extension, where it can not reach it at all, like XRP. Who knows? This is part of the game with risk management, and not invest too much money that you can't afford to lose. And this is why it's so important to do the math yourself so that you can plan out to make in the next cycle, like so many others have done before, and make it. So you have to keep in mind that these are only minimal targets, like I've said, so the sky's the limit. Who knows? So the first DCA method we will cover is the price agnostic DCA method. And this sounds precisely like what the name implies. Basically, you make up a budget and a plan of how much of your own money you are willing to spend on the project you believe the most in, over a time period that you deem suitable for your own plans, whether if it's over a year, a couple of months, or indefinitely, etc. With this strategy, you're completely ignoring the market sentiment and stick to your routinely investing plan, regardless of. And this method has its own pros and cons. And also, it may not seem much at first when you begin to DCA into your favorite project with lower sums. And we've also been there where we thought, no way, I'm not going to make it. I'm only investing so little money, and etc. But you gotta have patience. Yeah, use the power of compounding interest and patiently wait for the next bull run. And trust me, you'll be greatly rewarded. Think of it like planting the seed for a tree. A tree doesn't magically grow huge in only a few days. It takes time, so patience is key. Now, the other DCA strategy that we personally like the most and will follow is the Confluence DCAing with the DXY price action. Now, if you don't know about the relevance of the DXY with the crypto and the stock market, please check out our video on the screen and to learn more about the DXY US dollar dominance chart and how it correlates with the stock and crypto markets. But anyway, in short, when the DXY is in a macro downtrend, then usually crypto and stock markets are very bullish, like we can see right here from 2002 to 2008, as well as from 2017 when crypto had a magical bull run, as well as the recent bull run we had from 2020 to 2021. However, when the DXY is in a strong uptrend, then it's the exact opposite. Then the US dollar is basically the best asset to hold, and usually crypto stocks are in a very, very bearish downtrend. As we can see right now in the massive surge up on chart for the DXY, breaking off from its double bottom structure on the monthly. And as we can see from the financial crisis of 2008 when the DXY popped up, as well as leading up to the dot-com bubble. Now, anyway, by using Confluence with the major fib resistance area that we've talked about very much, where we most likely will see the DXY top in the future, it might be a good strategy to take a big chunk of the total budget. That's what we are planning to do, personally. Once again, not financial advice. And buy up the crypto you believe the most in, that we believe the most in, at its potential lowest points. And sure, it might sound risky and not as safe as the price agnostic DCA method, but the potential reward is greater when using Confluence technical analysis to increase the odds in our favor. So we can look at one chart, for example, which is Chainlink, where we noted here as our area of interest will personally begin to DCA, where we have something I noted called stopping volume candle, which is like we discussed in previous videos, areas of liquidity where there's huge volume and where the big institutions and whales are interested to buy in. We have key monthly daily support levels there as well, and I noted the price from in between $3.50 roughly to $2.2. And to us, we will lay down a huge chunk of our own money and be say there because we find it to be an opportunity of a lifetime. So, in conclusion, the key takeaways from this video are the following. Price agnostic DCA is suitable if you do not care about the price and think long term or over several years. And Confluence DCAing might be suitable for you if you want to maximize your ROI and potentially time in the bottom better than if you were, say, price agnostic. And set clear goals. I mean, do your own research on your favorite projects, draw your own fib targets, have a plan for profit taking. I mean, think these things out and be better prepared for the next market cycle. And finally, use the coinscalculator.net website that I showed you to do the math and see what your potential ROI might be. That's all from me. Thank you so much for your time, and leave a like and subscribe if you enjoyed the video, or leave a dislike if you didn't. Please stay strong and stay safe in this rough macroeconomic period that we're in right now. Have a wonderful day. Big Boss out.